Okay, let's unpack this. Welcome to the deep dive. We're here to cut through the noise of corporate reports and really pull out the key nuggets for you. Today, it's all about Cisco's latest financial results. Fiscal year 2025, we've got the conference call transcript, the press release, and our mission is simple. Understand the numbers, yes, but also what they signal about the tech landscape, Cisco's strategy, and, well, the massive AI opportunity everyone's talking about. Our goal, leave you informed, maybe even a little surprised.
It's definitely a fascinating time. Cisco's results really give us a window into how a major player is navigating all this change. You see a strong core business, but the real story, I think, is how they're setting themselves up for this AI-driven future.
Exactly. So let's start with the basics, the bedrock numbers. Cisco closed fiscal 2025 strong. Q4 revenue hit $14.7 billion. That's an 8% jump year over year.
And the earnings per share, the non-GAAP EPS.
Right, 99 cents, up 14%.
Yeah.
And what's really notable is that this was actually above the high end of their own guidance.
Which says a lot in this environment.
It really does. For the full fiscal year 2025, revenue was $56.7 billion, up 5%. Non-GAAP EPS at $3.81, up 2%. So what's your meaty take? Strong numbers, but what's the underlying message given, the tricky global picture?
Resilience. I think hitting above guidance like that, it suggests really strong operational discipline. They're managing costs well, converting that revenue into profit effectively. It's tight management.
Yeah, good point. And it's not just about the immediate results, is it? They're laying groundwork for the future.
Yeah.
We saw solid growth in ARR, annualized recurring revenue, $31.1 billion, up 5%.
And the RPO, remaining performance obligation.
Up 6%, hit $43.5 billion. And within that, product RPO grew 8%. Plus, subscription revenue, that's up 3% to $7.9 billion. Now over half their total revenue, 54%. Why are metrics like ARR and subscriptions so vital for them?
Well, it's all about predictability, right? That shift to recurring revenue smooths things out. It gives them a much clearer view of future performance, less volatility. When over half your revenue is subscription-based, you've got a really solid foundation.
And that foundation is generating serious cash.
Absolutely. Operating cash flow in Q4 was $4.2 billion, up 14%. And for the full year, $14.2 billion. That's a huge jump, 30% up from FY24. That gives them a lot of flexibility.
And they're using that flexibility, especially to reward shareholders. Q4 saw $2.9 billion returned via buybacks and dividends.
And the full year total?
$12.4 billion for FY25.
Yeah.
That's 94% of their free cash flow, actually more than they returned in FY24.
Wow.
And listen to this, they increased their dividend for the 14th consecutive year.
14 years. That's a powerful statement of confidence, isn't it? It really underscores their belief in the stability of their cash flow, signals a strong long-term outlook for management.
Okay, so solid financials, strong shareholder returns, that sets the stage. Now let's pivot to maybe the most exciting part, AI. This is where it gets really interesting. Record AI infrastructure orders from web-scale customers.
Yeah, the hyperscalers, we're talking Google, Amazon, Microsoft, the big cloud players building out these massive AI systems.
And the numbers. Over $800 million in AI orders just in Q4.
It's just Q4. And look at the full year FY25 total AI orders from web-scale topped $2 billion. Remember, their original target, set just last year, was $1 billion. They more than doubled it.
That's incredible. It shows the sheer scale of AI build-out happening right now.
It really does. And the mix was interesting, too. Over 2/3 systems, the rest in optics, shows broad demand for their solutions. Cisco called it undeniable capability and relevance for these advanced customers.
So how are they positioning themselves for this AI era more broadly? There's a survey mentioned. IT leaders, 97% believe they need network upgrades for AI.
Right. And Cisco's response has been to refresh basically their entire portfolio. New networking systems powered by their own Silicon One chip.
That's their custom silicon, built for these high-performance needs.
Exactly. Plus AI-native security, updated software. It's about providing that critical underlying infrastructure. They frame the AI opportunity in three sort of connected pillars.
Okay, what are those?
First is AI training infrastructure. This is for the web-scale giants, but also neo-cloud providers, the smaller AI-focused cloud guys and sovereign customers, like governments building national AI. They're deploying combinations of their 8K routers, Silicon One, optics, and they expect demand from neo-cloud and sovereign to really ramp up in FY26.
Okay, pillar 2.
AI inference in enterprise clouds. This is about using AI after it's trained in businesses. Here, it's about innovation in hardware and software and that big NVIDIA partnership. They're trying to make AI infrastructure deployment simpler, faster, and less risky for enterprises. The Cisco Secure AI Factory with NVIDIA, that's like a blueprint for building secure, AI-ready data centers.
Security seems baked in there.
It has to be. And the third pillar is network connectivity, basically helping customers modernize, secure, and automate their existing networks, getting them ready for AI agents and apps to be everywhere.
You mentioned agentic AI earlier. That sounds significant, more than just chatbots.
Oh, definitely. Agentic AI isn't just responding to a query, it's autonomous software agents. They're working constantly, interacting with each other, with data, maybe even physical systems.
So constant background activity.
Exactly. Which means network capacity needs are compounded. Cisco talks about unprecedented levels of network traffic. It's not just peaks like with chatbots, it's consistently high traffic. And, crucially, a bigger threat landscape.
Right. If everything's always connected and interacting, the attack surface grows.
Precisely. So security isn't just important, it's critical. It needs to be fused deep into the network fabric. Cisco feels they're uniquely positioned to do that, embedding security everywhere, not just bolting it on.
And partnerships are key to delivering this, the NVIDIA collaboration, for instance.
Yeah, integrating Cisco Nexus switches with NVIDIA's Spectrum X architecture. That's for the really high-speed, low-latency networking needed for AI clusters.
They also mentioned seeing momentum with neo-cloud providers.
Yes, several large deals closed in Q4 there. And new partnerships in the Middle East are progressing humane. G42, Stargate, UAE, the whole sovereign AI opportunity is expected to build in FY26.
And it's not just NVIDIA.
No, they specifically mention working closely with AMD on sovereign AI too. That suggests they're aiming for integrated solutions across different chip platforms. Plus, enterprise AI orders are ramping, pipeline in the hundreds of millions already. Enterprises want simple, scalable, secure AI solutions.
Okay, let's shift focus slightly. What about the core business performance outside of pure AI? Overall product orders grew 7% in Q4. Pretty solid across all geographies, despite the complex environment they mentioned.
Yeah, America's up 5%, EMEA up a strong 10%.
What drove EMEA?
Strength in the UK, Germany, Saudi Arabia, service providers, and security, apparently. APJC was up 7%.
They did call out U.S. federal as being tough, though. So if you exclude that, global order growth was actually 10%.
Right. U.S. federal often has its own budget cycles, procurement timings. It can be volatile year over year. The fact that the rest of the world grew 10% is encouraging. And they are forecasting federal to return to growth in FY26, so likely a cyclical dip.
Makes sense. Looking at specific customer markets, service provider and cloud orders were described as very strong, up 29% year over year.
Driven by that web-scale demand we talked about, triple-digit growth there for the fourth straight quarter. 4 of their top 6 web-scale customers grew orders in triple digits. That's huge.
And 2 web-scale players placed orders over $1 billion each in FY25 across the whole portfolio: networking, security, collaboration, observability.
It shows they're buying the whole integrated platform, not just point products. Demand from telco and cable was strong too. Orders up over 20%.
Is that just AI or broader modernization?
It's broader, I think. Yes, AI capacity, but also general upgrades for 5G, higher bandwidth demands for video, cloud apps, IoT. They need to keep pace.
Okay. Enterprise orders were up 5% in Q4. Some large deals closed. Public sector down 6%, but against a really tough comparison from last year.
Right, context matters there.
Let's zoom in on networking and security specifically. Networking product orders grew double digits again in Q4.
4th consecutive quarter of double-digit growth there.
Driven by web scale, switching, enterprise routing, industrial IoT, servers. Pretty broad-based. They seem really excited about the new Catalyst 9K smart switches, calling it the start of a major multi-year campus refresh cycle.
That's potentially huge, tapping into that massive installed base of older switches, tens of billions of dollars worth. These new ones have Silicon One AI-driven operations. It's a significant upgrade path.
And industrial IoT is also performing well.
Very well. Double-digit order growth for the 5th straight quarter. They see solid demand into FY26, partly linked to countries investing domestically as part of trade deals, plays to Cisco's strengths.
Okay, now security. Orders grew mid-single digits in Q4 overall.
But the new and refreshed products, things like Secure Access, XDR, Hypershield, AI Defense, the new firewalls, identity solutions, those saw order growth over 20%.
So the innovation is driving growth. And those new products make up about 2/3 of the organic security portfolio now.
Exactly. It's a strong sign that their newer offerings are hitting the mark.
And the Splunk integration seems to be paying off too.
Definitely. A 14% year-over-year jump in new Splunk logos in Q4. Over 300 new Splunk customers added across Q3 and Q4 combined. And they mentioned lots of new Hypershield customers are bundling it with the N9300 switches.
Embedding security right into the network fabric.
Which brings us back to identity. Duo and IC performing well, and work on agentic identity. What exactly is that?
Right. If machines and AI agents are talking to each other constantly, they need secure identities too, not just humans.
Absolutely critical. You need robust authentication, authorization, monitoring for everything on the network, human or machine. If security is embedded, secure identity for all participants is non-negotiable.
This all ties into a bigger innovation push, doesn't it? Cisco Live US in June sounded huge.
Yeah, their largest innovation payload to date, over 20 new offerings. Things like Agentic Ops and Cisco AI Canvas.
What's AI Canvas?
It's described as a revolutionary generative UI. Uses their own deep network LLM, a large language model trained specifically on network data. The idea is real-time collaboration between network and security teams, unifying telemetry, simplifying operations, speeding up troubleshooting.
And they're using AI internally too.
Heavily, across customer experience, engineering, sales, operations. Over 2/3 of their support cases are now touched by AI and automation, seeing real productivity gains. It shows they're not just selling AI, they're living it, which should, benefit their products.
Okay, so looking ahead, fiscal year 2026 guidance.
For Q1, they expect revenue between $14.65 billion and $14.85 billion. Non-GAAP EPS, $4.97 to 99.
And the full year.
Revenue guided $59.0 billion to $60.0 billion. Non-GAAP EPS between $4 and $4.06. That assumes current tariffs and exemptions stay put.
Important note. What about concerns over order pull forwards? Customers buying early.
They addressed that directly, said they see no indication of it. Metrics like order linearity, shipment to activation times, requested ship dates, all look normal. Gives them confidence the demand is organic, not just pulling forward budgets.
Good to hear.
Yeah.
And how do they see network growth continuing beyond this initial AI surge?
Two main drivers, they say. One is obviously the AI revolution continuing to drive modernization everywhere, cloud, enterprise, telco. But the second is that refresh opportunity. The campus upgrade with Cat 9K is huge, tapping into that massive installed base. That's multi-year. Plus other refreshes in routing, Wi-Fi 7 uptake. There's a long runway for core networking growth.
And the outlook for security growth.
They expect the growth rate there to keep improving through FY26, driven by adoption of those new products that are already growing fast. They're confident they'll exit FY26 near their long-term target for security, plus observability that's 15%, 17%, or be on a clear path to get there soon after.
Finally, translating those big AI orders into actual revenue.
Right. They recognize about $1 billion in revenue in FY25 related to those web-scale AI back-end orders, which, given they took over $2 billion in orders, suggests a significant amount still to convert into revenue in FY26 and beyond. It's real, and it's growing.
Okay, so wrapping this up, what does this all mean for you, the listener, trying to make sense of this tech landscape? We've seen Cisco's strong financials, their really pivotal role in building out AI infrastructure, and their strategic bets on core networking and security. They're leveraging partnerships, innovating internally, riding that AI wave while building predictable revenue. But here's something to really chew on. If this agentic AI future truly means constant machine-to-machine chatter, autonomous agents driving unprecedented traffic, how does that fundamentally change digital business architecture? Does security truly shift from being an add-on to being an inseparable, embedded part of every connection, every identity? And maybe most importantly, what does that imply for the choices you need to make right now to prepare your own infrastructure for what's coming?